Imagine you had invested $1,000 in supermicro in 2018. What would that investment look like today, in 2024? Astonishingly, it would have grown to a staggering $63,503, a 6,250% increase. That's right, your initial investment would have multiplied more than 63 times over. Now break this down further, and you'll see this represents an annual growth rate of 129%. That's well beyond the average market return. This extraordinary return on investment showcases the impressive performance of supermicro over these 6 years. But what exactly fueled this meteoric rise? What underpins this growth, and can it continue? These are the questions that lead us to an in-depth look into supermicro's financial and business performance. So, let's delve into the numbers and see what they reveal about supermicro's success story. Supermicro's revenue in 2023 stood at $5.8 billion, marking an impressive annual growth rate of 25% since 2018. Let's break down this growth trajectory a little further. Between 2018 and 2019, supermicro saw an 11% decline in revenue. The following year, the firm experienced a slightly smaller dip of 6%. However, the tables turned in 2020, with a noteworthy surge of 38%. This upward trend continued in the subsequent years with a 68% spike in 2021, followed by a 57% increase in 2022. This robust growth in recent years is one of the key factors behind supermicro's soaring stock value. Now, let's delve into the structure of supermicro's revenue. 93% of the total income is derived from server and storage systems, while the remaining 7% comes from subsystems and accessories. In terms of geographical distribution, the United States leads the way, accounting for 72% of the revenue. Asia follows with 16%, Europe contributes 9%, and the rest of the world makes up the remaining 3%. This strong revenue growth trend, coupled with the firm's diverse geographical presence and product line, has helped supermicro establish a robust foundation. The company's ability to generate consistent income from its primary product line, while also expanding into new areas, demonstrates its strategic foresight and adaptability. Furthermore, the firm's significant revenue share from the United States, one of the world's largest and most competitive markets, indicates its strong competitive position and brand reputation. These figures demonstrate a strong revenue growth trend which partly explains the robust stock performance. But as we all know, revenue is just part of the story. In the next section, we'll dive into supermicro's profit margins and net profit to get a deeper understanding of the company's financial health and profitability. Supermicro's gross profit margin for 2023 was 16%, consistent with the 5-year average. However, the net profit margin stands out at 9%, a significant improvement over the 5-year average of 5%. This consistency in gross profit margin shows a stable business model, but the remarkable growth in net profit margin reflects the company's increasing efficiency in managing its expenses. Now let's delve into the net profit. In 2023, supermicro reported a net profit of $500 million. If we compare this to the net profit in 2018, we see a staggering compound annual growth rate of 66%. This growth rate is nothing short of impressive and is a testament to the company's successful strategies and strong business execution. So, what does a stable gross profit margin and a growing net profit margin tell us? Well, the gross profit margin measures the profitability of the company's core business activities, excluding overhead costs. A stable gross profit margin means that supermicro has been able to maintain its pricing power and control its cost of goods sold effectively over the years. On the other hand, the net profit margin takes into account all expenses, including overheads. A significant improvement in the net profit margin shows that supermicro has not only been successful in managing its direct costs but also its indirect costs. This could be due to economies of scale, more effective cost management, or a combination of both. In a nutshell, supermicro's stable gross profit margin indicates a steady business, but the growing net profit margin points to an improving operational efficiency. This efficiency is clearly reflected in the impressive net profit growth rate, which ultimately contributes to the company's strong stock performance. These profit figures further explain the stock's impressive performance. While the gross profit margin has remained steady, the net profit margin has seen substantial improvement, indicating a more efficient operation and more effective cost management. This has led to a significant increase in net profit, which has undoubtedly contributed to the stock's strong performance. Supermicro's total assets in 2023 were $5.4 billion, a significant increase from $3.7 billion in 2022. This surge in assets is indicative of the company's successful growth strategy and robust business performance. Now let's delve a little deeper. The net assets for 2023 were $3.1 billion, a considerable leap from $2 billion in 2022. This increase in net assets further underscores the company's impressive financial health. Let's turn our attention to the equity to total assets ratio. In 2023, this ratio was 57%, up from 54% in 2022. This uptick signifies that the company's equity is a substantial part of its total assets, implying solid financial stability. Next, we look at liquidity ratios, specifically the current and quick ratios. Liquidity ratios are crucial because they measure a company's ability to pay off its short-term obligations. The higher the ratio, the greater the company's liquidity, and the lower its risk of default. The current ratio for Supermicro in 2023 was 2.4, slightly up from 2.29 in 2022. This demonstrates that the company had more than twice as many current assets as current liabilities, ensuring its short-term financial stability. The quick ratio, which excludes inventory from current assets, was 1.15 in 2023, a slight decrease from 1.29 in 2022. Although a slight drop, it still signifies that Supermicro could cover its current liabilities even without selling any inventory, which is a strong indicator of financial health. These figures demonstrate a strong and improving financial position for Supermicro. By assessing the total and net assets, equity to total assets ratio, and liquidity ratios, we can conclude that Supermicro has been effectively managing its resources, paving the way for its sustained growth and stability. Despite impressive profit figures, Supermicro's cash flow paints a different picture. Now let's delve into the numbers. For the year 2023, Supermicro reported negative operating and free cash flows of $300 million and $320 million respectively. What does this tell us? It suggests that the company's cash generation is weak, despite the impressive net profit figures we've been seeing. Now, there are a few reasons for this discrepancy. One of the primary culprits is the company's high investment in inventory. Supermicro has been stocking up, perhaps a little too much. With inventory days standing at a hefty 145 days in 2023, down from a staggering 170 days in 2022, it's clear that the company has a slow sales turnover. This is a clear area where Supermicro could make improvements to bolster its cash flow. Another contributing factor to the weak cash flow is the high receivable days. At 82 days in 2023, down from 109 days in 2022, the company is taking a considerable amount of time to collect payments from its customers. Again, there's room for improvement here. Now let's shift gears and perform a DuPont analysis. This will allow us to dissect the components of the return on equity, or ROE. In 2023, Supermicro's ROE stood at 16%. This was made up of a net profit margin of 9%, an asset turnover of 1.27, and an asset-to-equity ratio of 1.74. When we compare these figures to 2022, we see a decrease in ROE from 20%. This decline is due to a decrease in all three components: net profit margin, asset turnover, and the asset-to-equity ratio. These figures indicate potential areas of improvement for Supermicro despite the overall positive picture. In summary, Supermicro's impressive stock performance can be attributed to its strong revenue growth, improved profit margins, and robust financial position. The company's annual revenue has grown at a compound annual growth rate of 25% since 2018, reaching $5.8 billion in 2023. This robust revenue growth, coupled with a stable 16% gross profit margin and an improved net profit margin of 9%, has fueled Supermicro's strong stock performance. Moreover, the company's total assets have grown significantly, from $3.7 billion in 2022 to $5.4 billion in 2023. This has improved Supermicro's financial standing and increased investor confidence. However, Supermicro needs to improve its cash flow and inventory turnover to sustain this growth. The company's current ratio and quick ratio are commendable, yet its operating cash flow and free cash flow are in the negative territory. Stay tuned for more in-depth company analyses and don't forget to subscribe to our channel.